And welcome. Our top focus at this hour, the United States Federal Reserve has raised interest rates by a 0.25 percentage point. This comes amid the banking system turmoil that began on March 10th, which was triggered by the collapse of Silicon Valley Bank in California, causing the biggest banking sector meltdown since the 2008 financial crisis. Jerome Powell, the chair of the Federal Reserve, said the Silicon Valley Bank collapse did not indicate wider weaknesses in the banking system and attributed the collapse to bad management. He said the takeover of Credit Suisse seemed to have a positive outcome.
Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again.
This is the 9th interest rate hike announced by the United States Federal Reserve in the last year. Despite the interest rate hike, Jerome Powell said that the United States banking system is sound and resilient, whereas analysts say the Fed is now living on a hope and a prayer that they haven't done irreparable harm to the banking system. However, despite Powell's reassurances, Wall Street ended sharply lower. The interest rate hikes seek to balance the risk of rampant inflation and the threat of instability in the banking system.
We're very focused on getting inflation down, because we know in the longer run that that is the thing that will most benefit the people we serve. That's how we can have we've had very strong labor markets through these long expansions that we've had.
Meanwhile, Janet Yellen, the U.S. Treasury Secretary, said the government was not considering to insure all uninsured bank deposits.
What I'm focused on right now is trying to stabilize the banking system, and I know our banking system to be sound, and I think right now we need to focus on improving the confidence of the public that we do have a sound banking system, and we can debate in the days ahead whether or not $250,000 is the right level for deposit insurance, or whether that system should be changed in some way. I'm not going to weigh in on it.
And for more on this, our correspondent Susan Teherani has sent us this report from New York.
The Federal Reserve raised its key rate again by 0.25 points, bringing it to its highest level in 15 years. The increase will make it even costlier for borrowing anything from homes to autos and other purchases. The interest rate increase also comes at a time when credit card debt is at an all-time high. With inflation being at an all-time high, many Americans are relying on their credit cards to get by. Federal Reserve officials also said that they expected unemployment rates to reach 4.5% by the end of 2023 as interest rate hikes slow the economy. Susan Teherani reporting from New York for WION World is One.
WION is now available in your country. Download the app now and get all the news on the move.